You're going to feel like you've never watched a Bitcoin video before. This will be the most original and deep analysis of Bitcoin you've ever seen, asking the hard questions that most investors avoid. You can watch thousands of Bitcoin videos, but never once think of the things that really matter. I'm Jerry Banfield and I review cryptos. I've reviewed thousands of altcoins, and today I'm reviewing Bitcoin. And I'm using the same 10 questions that I review every crypto blockchain with. And today, Bitcoin, you will be surprised at what I uncover for you in here. So to begin, and I'm doing this video as if I was doing a video for my mother, my friends, my family members. I'm going to give you the best information and research I have. Now, I'm not a financial advisor. This is not financial advice. And I hold 6,500 ICP. This is why I don't hold Bitcoin, even though I bought Bitcoin originally in 2014, and I've been in and out of it ever since then until 2023, because I've looked deeper than everybody else does. And if you want to see the future, this is the video that will wake you up to, why does nobody talk about these things? Why doesn't anybody look at these things? And to give Bitcoin a fair review, I use the same 10 questions I use for every other blockchain. So let's begin. These are cold, hard facts. You can research all these yourself and confirm all the things I'm saying in this video. First, does Bitcoin offer technical capabilities that clearly stand out in a way that can matter long term? No. This is a cold, hard technological fact. Bitcoin stands out as a brand and an asset. That's marketing, not technology. But it is a very limited blockchain. It has almost no technical advancement. After all, how many blockchains have you seen that market themselves as better than Bitcoin? Bitcoin's base layer is extremely limited in throughput and functionality. Quantum computing adds a huge problem for Bitcoin. There's just no nice solution I see for this. You're either going to have to lock the old wallets or allow quantum computers to break them. And that's going to be ugly. Serious concerns. And my price prediction for Bitcoin, I think Bitcoin is going to hold its value more than most other blockchains. But my price prediction more in the long term for Bitcoin, I think it's going to settle around 30-some thousand. Like, I think some of the best days for Bitcoin have already come and gone as more people figure this stuff out. Bitcoin has to go through very difficult choices, the hardest, worst choices we've ever seen Bitcoin have to make. And there's just so many other things that can go wrong. But one of the things is this. Number two, second question, can developers build useful products on Bitcoin without major off-chain dependencies or third-party infrastructure? Now, do you realize most people that are in Bitcoin do not know this? Most Bitcoin products depend on exchanges, custodians, wrap tokens, second layers, or outside infrastructure. The blockchain itself is too limited to support broad application development. In practice, Bitcoin functions as a base asset. And if Bitcoin needs a real scaling path, Internet Computer Protocol, or ICP, is the only scaling path that I see even is going to help Bitcoin stay relevant in the long term. Now, why does this matter? This matters because if you have all these off-chain dependencies, the Bitcoin blockchain is basically a spreadsheet secured by cryptography. It cannot host a website. It can only have a few megabytes per block, which is like once every 10 minutes. Thus, there's very little, you can't even put a regular phone photo in any kind of practical terms on the Bitcoin blockchain. You can technically put little tiny ordinals and JPEGs, but that even can be expensive. Thus, the Bitcoin blockchain needs all these third parties and off-chain dependencies. With AI advancing and with cybercrime exploding, anything that it has all these off-chain dependencies and third-party infrastructure is very vulnerable to being destroyed by hackers. As we've seen, Bitcoin bridges get wrecked by hackers and crypto exchanges that lose the private keys and then end up going to zero. Holding Bitcoin is, to me, continuing to get riskier and riskier. While what is the upside at this point? We'll look more at that in a minute. Here's a key question to ask. Does this blockchain do something the world is likely to truly need in 5 to 10 years? Well, I just barely had to give this a yes, because Bitcoin still fills a role as a censorship-resistant digital reserve asset. It does have the strongest position in the digital gold category, but this is a need that's much more narrow than most people imply, because digital gold is a narrative. It's not like real gold, where I can go to my local gold store and buy a $20,000 necklace and then wear that around and then sell that at possibly a higher price in the future, or where my computer here that I'm recording in or my phone likely have gold inside them in terms of helping it all run and function. Thus, gold, real hard gold, the element gold, and all the stuff you make with gold, that has real world use that's not going away. Digital gold, though, is a narrative. That is marketing. That the blockchain, Bitcoin may last into the future more than most blockchains just because it was the first. And just by that, there will be a certain level of people who want to collect Bitcoin, that want to hold on to it as a keepsake to say they have some of the original crypto blockchain. And for that reason, I'll say that Bitcoin's floor price is likely to be way higher than most other cryptos. I consistently review cryptos and predict they're going to go down 90+%. But Bitcoin, I'd say, is the price is not going to continue to appreciate. Meanwhile, the Bitcoin mining, anytime Bitcoin is being attacked by the centralized infrastructure, the mining and the energy usage and the computation always come up. And then that stuff suddenly goes away when you're supposed to buy Bitcoin. But remember, that stuff can come back very easily, especially if you have things like oil and energy prices getting squeezed. All those narratives can come back for Bitcoin, and we could easily see times where Bitcoin is much lower than this. Next question, and here's the key one again. Is demand for Bitcoin driven mainly by real usage rather than speculation? No. Now, I know many of you think that all of crypto is just speculation, but it's not. You've got internet computer protocol with real technology and demand being driven for that by people actually using the tech who don't even know it's on a blockchain. That's what I'm looking for. And Bitcoin, almost all the demand for Bitcoin is pure speculation. And that is people thinking price is going to go up. And then just sitting there on a Bitcoin hoping the price goes up. And the price action is heavily influenced by macro sentiment, ETFs, institutions, and trading. Most people buy Bitcoin as an investment, not to actually use it. And that's a huge problem. And that'll transition to question 5. Do Bitcoin's tokenomics, dilution profile, and valuation create strong asymmetric, and asymmetric being a key word? If you look back at the report that BlackRock did talking about how asymmetric Bitcoin was, I don't feel that's longer valid. Bitcoin to me is not asymmetric from here. Bitcoin has high risk. I mean, it's valued in the trillions of dollars. That could easily collapse. And how much more upside is there? At this point, you're looking that you need hundreds of billions of dollars of buying power in Bitcoin just to move the price a little bit. Now, I know many of you think Bitcoin's supply model and tokenomics are the gold standard, the digital gold standard in crypto, but they're not. There's millions of dollars of Bitcoin every day that are being essentially unlocked through mining and then often dumped on exchanges or held and dumped at various price points. Thus, there's millions of dollars of practical Bitcoin inflation. There's 3 Bitcoin every time you mine a block, and that's like every 10 minutes. So that's around approximately, let's call it, a couple $100,000 every 10 minutes. And then multiply by 6, that's like $1 million an hour. And roughly, you might have $20 million a day of Bitcoin that's essentially being handed to miners in exchange for pumping all this energy and using all this computation power. And then the miners often have to dump that every day. So you've got this constant downward selling pressure on Bitcoin, and the security model could utterly collapse if the price collapsed. Now, it hasn't so far, but we've got tougher things coming in Bitcoin with quantum computing than we've ever seen before. Thus, to me, I see so much possible downside from Bitcoin. I mean, we could reach price targets at like 3,000, 5,000, 10,000 at some point, especially if the quantum computing changes don't go well, or if suddenly a wallet does get hacked and move funds all of a sudden. There's some huge days that could come along and wreck Bitcoin. Plus, you constantly have exchanges that are losing people's Bitcoin that seem to be selling fake Bitcoin. And if you have Bitcoin supposedly on an exchange, you don't necessarily actually have that Bitcoin on the blockchain. You don't even know until you withdraw it. Plus, actually self-custodying Bitcoin is difficult. So all that plays into the tokenomics. All of that plays into the tokenomics. And that leads into question 6. Is investing in Bitcoin aligned with crypto retail values of decentralization and empowerment rather than institutional approval? Now, this has changed over time. When I got into Bitcoin in 2014, this was a very hard yes. But today, it's a hard no. Bitcoin began with peer-to-peer values. But today, most of the hype, most of the speculation, most of the price action is from institutions, ETFs, custodians, and mainstream approval. It's not from the blockchain itself doing something that's genuinely valuable for humanity, which puts it in a downside risk that, to me, Bitcoin is drastically overvalued today. I mean, in an absolute minimum, it should be worth 34,000, but I could easily argue for 10 or 20,000. It's overvalued because there's all these institutions and governments that are buying it because they're trying to avoid inflation. And you've got companies like MicroStrategy with Michael Saylor who put a bunch into Bitcoin, governments like El Salvador. But once they realize there's something better, and in ICP that has like 1,000 times smaller market cap, and the technology actually does do everything you need fully on chain, from running AI fully on chain to transactions to websites, that seriously threatens the entire model of Bitcoin, which is all basically at this point, the only upside left for Bitcoin is convincing more institutions and governments and ETFs to try and plow more, what I will put nicely is not thoroughly done your own research money into Bitcoin. Most of the participation in Bitcoin, I estimate from what I've seen, about 99% of everything people are doing supposedly with Bitcoin is actually going on a Coinbase application or a crypto app like Binance or an ETF, and then giving them money, and then in exchange, they tell you that you have Bitcoin in your account. But in many cases, like these ETFs, they won't even let you take the Bitcoin off of their exchange or ETF and put it in your own self-custody. Even if you do put it in your own self-custody, you risk losing it. You lose your hardware wallet, your recovery phrase, you could lose access to your crypto. So many people just use centralized custodians, but they're not immune to losing access to it either, as we can see. So almost everything going on with Bitcoin is through third parties, which to me has truly ruined the decentralization and empowerment of the original blockchain. Bitcoin today is nothing like it was 12 years ago. Today, to me, it's come and gone. You've missed the opportunity to make good money off of Bitcoin, and it is absolutely not a safe bet for the future. People think that, oh, Bitcoin's just going to go up forever because it has in the past. But do things in the past just indefinitely repeat all the time? Look at what's happened with AI in the last few years. AI has wrecked things that have been very profitable for a long time across all different kinds of industries. And Bitcoin is not immune to a changing world that no longer needs it. To me, we've already hit the top of getting institutions and governments into Bitcoin. And as soon as they find ICP, they're not going to want Bitcoin anymore. So it's not in a good position in terms of the narratives, and the narratives and marketing are the only thing you've got at this point. Now, number 7, I will answer yes that Bitcoin is decentralized and resilient enough to function without heavy dependence on insiders, a foundation, or a single organization. It still is extremely at risk and constantly under exchange and centralized manipulation, where if an exchange wants the Bitcoin price to go down, they can crash it. Or if the crypto matrix wants to push everybody into buying Bitcoin, they'll push a whole bunch of narratives and videos and content and price action to support that. Still, the fact, from what I can see, the blockchain itself remains strong as a decentralized network. There's problems with even this, though. Right now, there's anywhere from 2 to 5 people who are in positions of control over the vast majority of Bitcoin mining. Is that decentralized? I don't think so. But compared to most of the other blockchains I review, Bitcoin is much more decentralized and resilient than others. Although, again, it has to tackle quantum computing. And that's going to be the hardest thing we've ever seen for Bitcoin. And that's a certainty that that's coming. That plus the hash rate continuing to go up, and then the mining rewards continuing to go down. If Bitcoin's price doesn't keep going up from the artificially restricted supply from people losing it, which is a huge risk that people don't consider, that you realize the Bitcoin price could keep going up, but the odds of you losing your Bitcoin through having it on exchange or losing it in self-custodying, they add this huge additional layer of risk that even if the price does go up, you've got this huge chance of losing all your Bitcoin value for something you might not control on an exchange or through an accident, or if you've got, say, a parent that passes and the kids can't get access to the Bitcoin. There's so much Bitcoin people have that's been lost, and that's not factored into the price. So this decentralization also means there's no one that can help you. but maybe a quantum computer could hack the Bitcoin wallet for you one day. Number 8, does Bitcoin have a clear public-facing core development team with clear accountability and a strong technical track record? As most of us know, Bitcoin has an anonymous founder. Although it does have, a core team of like a handful of people, it does have a strong technical history of maintaining the blockchain now for like 17 years, but it does not have clear public accountability. And this becomes very important when you have major issues like quantum migration. If the founder of Bitcoin was still around and could address issues like quantum migration, that would give it a much higher level of trust and a much lower risk. But one reason I don't hold Bitcoin is I'm not holding a crypto with an anonymous founder. Because whether you believe all these different theories as to who the founder of Bitcoin was, the fact is that most of us don't know for sure. And that uncertainty equals risk. It does not equal opportunity. Uncertainty as to who the founder of Bitcoin is a huge risk, especially compared with something like ICP, where you can see the exact founder and hundreds of people and engineers working on it, and all that at 1,000 times lower market cap. So that's a big weak point for Bitcoin that most people don't consider. Number 9, has Bitcoin carved out a category where no stronger incumbent already owns the core narrative? Now, this one, Bitcoin has done this very well. Bitcoin is the first crypto. It's dominantly covered the digital gold narrative. No other crypto asset comes close to Bitcoin's strength in this category. And Bitcoin has no centralized marketing team like many of these other blockchains do that pass out money to influencers to talk about it. Although you do have people like Michael Saylor that buy Bitcoin, and then they have a huge incentive to promote Bitcoin and get everybody to listen to their point of view. And we'll talk more about that in question 10. But even the critics of Bitcoin admit that Bitcoin dominates the niche. So Bitcoin is the current king of crypto in terms of market cap, but as you can see, market cap is a small part of the whole story. When you could lose your assets and the blockchain itself could have some serious problems at some point for arguably the first time, then it's not such a safe bet, even though the prices went up consistently. And it's unlikely that you're going to ever see the kind of price action that we did back in 2017 and potentially even the multipliers that we saw in 2021. Last question. Does Bitcoin have a strong self-reinforcing narrative advantage where major holders, influencers, institutions, ETFs, VCs, or ecosystem insiders have strong incentives to keep promoting it and defending its position in the market? Now, Bitcoin is the hardest yes in this. This is one of Bitcoin's greatest strengths. It has the largest community, although, some would tell you Ethereum and all the stuff around that, and they'd compare numbers, but Bitcoin has what I would consider mostly unarguably the largest marketing and community in crypto. And it has a ton of huge institutions, ETFs, VCs, ecosystem insiders that are holding it, and therefore they want you to buy it. Because if you buy it and push the price up, then they can potentially sell some of it to you. Bitcoin has one of the strongest narrative flywheels in all of crypto, but that doesn't mean it's indefinitely going to stay that way. Bitcoin has had a nice run over the last 17 years, but we've seen drastically diminishing returns in Bitcoin. If you look at Bitcoin's price chart in 2017 and that huge bull run before that, which I was a part of, and then you look at from 2018 to 2021, most of it was downtime, and the spike was not nearly as far up as the previous bull market was. And then the last several years have been very disappointing in Bitcoin. It didn't even manage to reach a 10x from 16,000 up to 120,000. And likely whatever next positive market there is for Bitcoin is again going to be greatly diminished. And that's assuming you are able to address all these other issues. So my final score for Bitcoin is that I give Bitcoin a 4 out of 10. Now, the best review is my Internet Computer Protocol review, and that only gets an 8 out of 10 because I ask tough questions that really matter. And to me, a 10 out of 10 would be a perfect blockchain to invest in. Most blockchains I review get anywhere from like a 2 or a 3. Bitcoin does have these dominant narratives, does have true decentralization more than most any others. It owns its category, and it's more likely than most other layer ones to still be relevant as long as it can address the quantum computing issue. So Bitcoin is strongest as a narrative asset, but narrative assets are most weak over time because the narrative is constantly has to be maintained. But ICP is dominant as the #1 technology platform, and the technology platform is in a position to scoop up narrative assets along the way. Because when you can do everything you can do on ICP, you start to wonder, why would I even have anything besides ICP? Now, most people don't know this. So that's a huge threat to Bitcoin, is having something like ICP rise and become dominant. And it even could rise in collaboration with Bitcoin. Now, Bitcoin clearly wins on brand decentralization and category ownership, but it loses on scalability, functionality, accountability, and direct on-chain usefulness. If the reality today, that I see is dominant, and almost nobody would argue with this, the Bitcoin blockchain only transacts around 5-10 transactions a second. That's clearly not something that's going to work worldwide. And unfortunately, the vision we had for Bitcoin when it started out, of this decentralized platform where all of us could just send money around the world, it's become a trap. Where the reality is almost everybody interacts with, quote, Bitcoin through centralized third parties. And you don't even know if those centralized third parties actually have the Bitcoin they're telling you they have. Because let's say I have a Jerry Banfield exchange, which I obviously don't. We'll call it JBE. But you go to JBE and I say, here, give me $70,000 and I'll say that you have a Bitcoin in your account. And then you go check the Bitcoin and the price and you're in there. But what happens if I only have one Bitcoin? And then once I've sold you the Bitcoin, then somebody else comes along and says, hey, I'll give you 70,000 and tell me I have a Bitcoin in my account. I'm like, great, give me your 70,000. You have a Bitcoin in your account too. Now there's two people who think they have a Bitcoin in the account, but the reality is I only have one Bitcoin on the actual blockchain in my exchange, because that's dishonest, but that's profitable. Now let's say I take the 140,000 and do whatever I feel like with it, and then I loan a third person your Bitcoin to use a derivative trading position. Now I can control the price, make huge artificial profits, and all of you are getting screwed. That's the reality of Bitcoin today. That hopefully exchanges are being honest and they're not selling Bitcoin they don't have. I'd say almost nobody be naive enough to think there's not at least some exchanges, based on what we've seen before with things like FTX and Celsius and so many of these exchanges. It's obvious that there's a decent number of exchanges, ETFs, centralized players that are selling Bitcoin they don't have to people. And some would argue, well, that should make the price higher. If people are buying Bitcoin, if the actual buying power in Bitcoin is even higher than the actual price. Well, what happens when people realize they don't even know if they have real Bitcoin? What happens when right now almost nobody knows and understands what I'm talking about? Almost nobody I ever meet in person, and I talk about with crypto in St. Pete, Florida, almost nobody I come across, and I say, hey, you got Bitcoin? Like, yeah. I'm like, where do you got that? On Coinbase? Like, how do you know they actually have your Bitcoin on a blockchain? Well, what do you mean? Of course they do. I'm like, you're taking a leap of faith there. You don't know that they do. Now, if you pull it out of your wallet, and I would say Coinbase is probably one of the more honest exchanges and probably less likely for that to happen. But I guarantee you some of these other exchanges are not that honest. And that's why you have to have these price manipulations. The price needs to go artificially high so you can sell a whole bunch of people on Bitcoin and get them to pay a bunch of money. And then you need to make all of them dump it back to you so that you can get away with selling Bitcoin you don't actually have. So when you combine that, the reality, that's not a sustainable reality. Because once people realize that that's the truth of what's happening to some degree or another, that you don't even know if you have actual Bitcoin. If you don't have the keys, you don't know if it's your crypto. And then you look at having to go through quantum risk and then trying to self-custody. It's a nightmare. It is all a nightmare. Now, Bitcoin is currently crypto's strongest brand, but because the blockchain is so weak and depends on all these centralized entities, the real world use happens through surrounding infrastructure. Basically, the entire narrative and idea of Bitcoin has been nearly completely compromised, to the point where you now even have dirty Bitcoin, where if you get Bitcoin from a certain source that was flagged, now you can't even use that. I'm so disappointed after how excited I was getting into Bitcoin versus the reality of Bitcoin today. It just looks like it's been ruined. So to me, in the long term, I think Bitcoin will be lucky to maintain a price of 34,000. I think this is like the absolute maximum price it truly deserves today based on all the stuff I've covered. And I appreciate you watching all the way to the end of this review. I reviewed this on my Jerry Banfield Crypto Reviews channel because the people watching my reviews before you said, please review Bitcoin. So I have, if you'd like more cryptos reviewed along these same lines, if you'd like to see the truth about your favorite coins, if you're tired of watching shallow videos that just give you hype and speculation, then I'm the place for this. I'm the place to give you serious videos that do real research and look at bigger picture things. I really appreciate this comment telling me how, how low the research has been up till now. And this is the vast majority of people are not getting quality information like this. So if you appreciate quality information like this, subscribe here. And if you want more of what I actually do like, check out my Jerry Banfield ICP channel, where all I do is talk ICP. Some people say they like my dating videos better than anything else, and that's on this Jerry Banfield channel. I talk dating. Thank you. I also do games if you're into gaming. Thank you for watching. Hope to see you again soon.